Level of credit card debt is stressful for anyone. But what happens if there comes a time when you just can't pay off your credit card? Sometimes you can't even make the minimum payment. There are implications if you find yourself in those circumstances. And we want to get ahead of that, provide some context on what happens, whether it's you or someone you know, someone you love. Doris Asiedu is a counselor at Credit Canada. She joins us now from Shelburne, Ontario. Hello there.
Hi, Bruce. Thanks for having me.
It is our pleasure. I want to start off with the feeling side of it, in that many times people aren't able to pay their credit cards. It happens to people, and we are going to get into the specifics on it. But what is the first thing that you would say when someone picks up the phone and says, listen, this is what I am dealing with? Where do you start?
Yeah, that's a good question. So first of all, I'll let the client know they're not alone. We hear this many times from our clients, but we're here to support them. I also want to find out why they're in that position, get an assessment, and see how we can support them.
We're going to talk about the various circumstances that one could be in, beginning with the very beginning. So it happens once. You can't pay your credit card bill, let's say the minimum payment. It happens once. What happens in that very first month?
In the first month, you're most likely to get a call from the creditor because you miss your payment. Also, the credit report, they're going to report at the credit bureau that you miss your payment. So that's not a good thing.
No. And if they do make that report, and they will, it's automated, how significant a hit would that be to your credit score? Like, is there, 3 chances, or is it a significant hit really just after missing that one?
Yeah, so the first missed payment, it's not going to be that significant. However, it will still be reported as an R2, which means you've missed your payment within the month. In terms of points, it's hard to say how many points it will go down by, but being that is the first, it's not going to be that significant.
Now, some people are in dire financial straits, and that is why they have missed. Some people, they just forgot. Something happened. They didn't get someone hid that statement under a piece of paper, and it's just, they didn't see it. They forgot to pay it. Can you call your lender and just beg forgiveness?
I wish that was the case, but unfortunately, I don't think so. Once you miss a payment, it will be reported. Now, you want to be proactive and take steps to avoiding that. So, for example, if you know you're going to miss a payment, you can reach out to the creditor in advance and explain the situation. They might have an internal hardship that they can offer. Or you can also set up like automated payments so you don't forget that, or put it on your calendar on your phone, anywhere that will give you that reminder so that you're going to be on top of your game and not miss a payment to begin with.
So that was the 1 month. There is you said an R2 on your credit report. What happens at 2, 3, 4, 5? If that problem persists, then what happens?
Yeah, so when it gets to 3rd and 4th month, then it's getting critical. So we're getting into the calls really coming, and that's when you really need to seek help, because it's not going to be very easy. And a lot of times, the reality is if people miss the first payment, what are the chances that they can make like a double payment in the 2nd or 3rd month? So you really need to seek help and get it sorted out.
It is not an all or nothing thing, I think, is a worthy reminder for folks. You are much, much better off if you just make the minimum payment. Is that correct?
Yes, because making minimum payments at least will help you to maintain your good credit. If ideally you want to pay off the credit card balances in full each month, but if you can't, you're better off just making a minimum payment so your credit doesn't take a hit.
At what point does your account go to a collections agency? There's a fair amount of like mythology about who those people are and, what those calls feel like, but it isn't the first step. You said you'd get a call from a creditor first. At what point do they pass you on to something that might be somewhat less polite?
Yeah. So legally, if you miss a payment, a creditor can send you to collections right away. But in general, what we see usually around the third month is when they will start within like the creditor's internal collections to see if they can work out an agreement or something. If that doesn't work, then it goes to a third-party collection agency. So I would say between the third and the fourth month is what we see.
And when you say an agreement, what would be some examples of what that could look like? What might the lender offer?
So the lender, again, based on my experience as a credit counselor, clients have told me sometimes they can offer them no interest for a period of time, maybe for 6 months to see how things go. Some lenders have internal hardship programs that they can offer clients. So they might work out a reduced payment plan just to see how things go. So it all depends on the lender and also the client circumstances.
What advice do you have for people to up the probability that they could find a solution with the lender before things get even worse? Is it being proactive? Is it charm? Is it articulating your hardship in the most compelling way? How would you prepare someone for that phone call that I'm sure would be very stressful for someone to make?
Yeah, that can be stressful, especially when we're talking about money. And I think for the most part, for what I hear from clients, they are a little bit afraid to approach the creditor because they don't know how they will receive their message. So it's a little bit of both, being proactive, being confident, and explaining your situation before it gets out of control is what the creditor is looking for. And just so consumers know, the creditors, they're also there to help. If the consumer is able to get to them earlier, sooner than later, it can solve a lot of these credit problems.
There is a scenario or a risk in which a credit card company could take you, the client, to court. How often does that happen?
That depends again on a number of factors. Number one would be assets. So if the consumer has an asset, there is a higher probability that a creditor might take legal action. So let's say they have a home with equity in it, so they can put a lien on their house. If the client is working, they can get a court order to get their wages to be garnished. So I would say usually about a year or so, if debts are not taken care of, then you are reaching the point where legal action could happen.
There are people in this circumstance who do have income coming in. Some people have nothing coming in, but some people do have income coming in. It's just not enough to cover everything. How would you advise them to prioritize those expenses? What comes first? What comes second? What comes third?
I think the basic necessities should always come first. So i.e. housing, utilities. Those are the primary need that we all have to be able to meet and therefore should be taken care of first. Not that the debts are not important, but you need a roof over your head to be able to sleep and even get to work in the morning to make money to pay the debts. So.
What about student debt? And this may be a misconception on my part. It seems that, especially student debt that has some sort of tie to government, there are more protections, more flexibility on repayment plans, and student debt could be lower down the list. Am I correct or not on that?
I think every debt is important. It's all about how the individual is handling the situation. Of course, student loans, if they're not paid, sometimes the government can take different actions too. Maybe your tax refunds, you might not get it. So really just again, communication is the key, reaching out to the student loan department. I know there are programs like repayment assistance program where they can stop interest for about 6 months. And then if the client situation hasn't changed, they can reapply and get that again. So it's really about letting the creditor know what your situation is, so a mutual agreement can be made.
You receive hundreds and hundreds of calls. You personally handle hundreds and hundreds of calls with people over the course of a year. So there are options. And it's one of the great things about credit counselors. They've got options. Take us through the options that you would put on the table. And obviously the fit would depend on circumstance. But what are some of the options that might be available to people who just simply can't get a hold of that credit card debt?
Yeah, so again, really understanding the client situation, going through an assessment to determine what is the best solution for them. The assessment will include collecting income, assets, debts, and then seeing what would be the best fit. Sometimes options might be a client reaching out to their creditors directly to negotiate, a lower rate of interest. Other times, depending on the client's credit, they might qualify for maybe a loan through their bank or a line of credit, something with a lower interest rate so they can pay off the debts in a much faster way. Other options might be consumer proposal, which is legal option, or a bankruptcy, but we want to use those as a last resort due to the obvious impact it will have on the credit. Or credit counseling, we also have a program that we can administer to the consumer if that's the right way to go.
Well, let's round out our conversation with that. What are the basics on this debt consolidation program that the nonprofit credit counselors, not just Credit Canada, but any nonprofit credit counselor, how does that work? What does that provide for the client, and how does it include the creditors?
Yeah, okay. So a DCP, or a debt consolidation program, is an informal agreement which is between 3 parties. So the client, the creditor, and the credit counseling agency who is administering that. The DCP will basically consolidate unsecured debts into a 1 monthly affordable payment. So by unsecured, I'm referring to credit cards, personal loans, lines of credit, basically anything without a collateral. When you talk about mortgages or car loans, those would not be included because these are secured loans. So when we combine these debts under one umbrella, the agency's role is to disperse that monthly to the creditor on behalf of the client until the debt is completely paid off. It can range from 3 to 4 years, maximum 5 years, or in cases where the consumer has the ability to pay it faster, it's open, so they can pay it faster and be out of that debt. The main benefits of doing a DCP, first of all, you're getting a 1 monthly payment, so it's manageable, it's affordable. Collection costs will cease, so those calls that keeps clients up at night and make them lose sleep at night, all of that will stop. And then I think one of the most important benefits is interest. Interest rates could either be reduced or in some cases eliminated, depending on who the creditors are. And again, it's a big deal for clients because based on my experience working here at Credit Canada, I hear this a lot. Clients would say, I've been paying this religiously for the past 20 years, but I'm still stuck. I can't get out. And it's because of the interest. So what I say to that is they're spinning their wheels, they're not really moving anywhere. But once that program is set up for them, provided they make the payment consistently based on the agreement, there is no doubt that they will definitely be out of debt. So.
A solution. There are solutions. Doris, thank you for joining us today. I really appreciate it.
You're very welcome. Thank
Doris
you.
Asiedu. Doris Asiedu is a counselor at Credit Canada, and she was here to talk about what happens if you don't pay off your credit card debt.